Hello guys, welcome to LSP TV. This is part one of the foundation course, You and Your Role. So I'm going to be discussing today you as the investor, as the trader, as the person that's making the decisions, and why that's number one first, and number two, probably the most important, probably one of the most important, or if not the most important factor in any trading or investing methodology. Okay. So the contents of this part one, is why you are the only thing that matters. Why having a system doesn't matter. Why traditional technical analysis does not work, and why learning to read price will change everything for you. And there's a quick side note. You'll see that I've put, you will always be the defining factor in everything that happens in your trading and investing. This is something that you absolutely must accept. There's no deviation. It's an absolute. If you, as the trader, as the investor, take full responsibility for everything that happens in your trading, whether you think it's your fault or not, whether you believe that you did everything right, whether you believe that you are on the right track and things still went wrong, it doesn't matter. You will always be the defining factor. Okay, and like I said, it's absolutely imperative and absolute. It's something that you just accept, and then when you accept it, you can move forward knowing that every decision that you make falls on you, and any change that you make will also fall on you. Without accepting full responsibility for anything that happens in your trading, it opens up the door to be pulled in lots of different directions. It opens up the door for you to be, affected or influenced by other people. It opens up the door for a lack of discipline. It opens up the door to make excuses for your behavior so you don't learn, and so on. Okay, so why you are the only thing that matters. Okay, I've touched on this as as an introduction, but if you have, and we'll say multiple personalities, okay, say 15 people, and they all have a different personality, they all have a different view on life, a different view on success, and so on. You'll find the one constant that remains in all of these 15 people is the person. Yeah, without the person making the decision, okay, then you kind of end up in a situation where somebody else makes the decision for you. And if somebody else is making that decision for you, or in this case the 15 people, you end up with, again, a situation where the onus, okay, and the responsibility is taken away from you. You give that responsibility to somebody else. Now, a lot of people do this from a psychological if you study psychology, you'll notice there is a section of psychology that focuses on this, where people push the responsibility onto somebody else. It's a defense mechanism, because if they do that, then they don't have to accept responsibility for the it's almost like a fear of failure. I don't want to accept responsibility if something goes wrong. If I set this up in a way where I do something, then I can kind of push it on that person. You said this, and I was told to do this, or this person said it was doing one thing. I just accepted that, and so on. So it's not my fault, and that's the thing. You have to accept that it is your fault. Yeah, you are the only person that matters in everything that you do in your trading endeavor. There will be plenty of people going through this course, and at the end I'm going to ask each individual what they got from the course, and let's just say, for argument's sake, 50 people take this course. Okay, so you've got 50 people, they take the course, and at the end, each of the 50 people give me a write-up of what they learned from the course and how they viewed it, what did they gain from it, and so on. And I can guarantee you every single one will be different. Yeah, you'll find some similarities, but that'll be based on the content and absolutely nothing to do with what they've learned. Okay, because we all resonate differently, and when we resonate differently with the things around us in the environment and so on, we're always going to see the world from our own frame, from our own context. Yeah, and that can affect what you do in the markets. Remember, when we're looking at data, we're all looking at the same information. If I'm sitting with somebody and we're looking at a chart and we're both looking at the same screen, we're both looking at the same data, but we're both going to be interpreting that in different ways. And that interpretation is a personal thing, and that personal thing is responsible for making the trading decision for you. Yeah, because whatever feedback you're getting from what you're seeing, you use that information to make a trading decision or investment decision, and it either works or it doesn't. Now, if you don't accept responsibility for that working or not, then you're never going to grow. Yeah, you're always going to push it onto something else, whether it's the environment, whether it's another person, whether it's an influencer online, or whatever the case may be. And you can see I've put, when you finally realize you are the reason for every poor trading and investment decision you make, it is liberating. And it absolutely is. When you take a step back and it just hits you, do you know what? This is my fault. I got into a particular pair, or I got into a particular asset class or a stock or whatever the case may be, and it just didn't go my way, And when you take a step back and you start to break that down, what was I thinking? How did I get into this? Oh, wait a minute. I was kind of looking online. I was trying to, do some research on a particular stock maybe. And I found that there was a lot of good news. I didn't really, do any sort of due diligence. I just kind of went with what I saw, 5 or 6 people that I know were in it. So I just jumped into it. When you do that, when you make investment and trading decisions like that, again, you're opening yourself up to being able to push that onus onto somebody else. And this is not what we want. Because when you take the onus on yourself and you understand, yes, this was actually my fault, then you start to learn from that. And you say, do you know what? I'm not going to listen to other people. I'm going to really start to break things down myself. And when I make the mistake, at least it's mine. At least I can own that mistake. And when I own that mistake, I can learn from it and move forward. Systems. If using a system if using a system, I'm not sure why. If using a system, I think we're supposed to say or methodology, but I'll correct that. If using a system really worked, you could just buy one online and make millions, okay? And why having a system doesn't matter. What I've written there is an absolute fact. There are, if you search online for forex trading system or a stock trading system or a crypto trading system, I can guarantee you, and you know this already, anybody that's listening to this now will know, there are thousands of searches, or search results that come up with multiple different types of trading systems, okay? And if it really mattered, if the system was then you could simply buy one of these systems that has a good track record, and then you could just turn it on, do exactly what the system tells you, and you would make a fortune, okay? That simply isn't the case. We know the defining factor, again, is you, us, the trader, yeah? And because of that, you can get a system that is absolutely flawless. Mathematically, it works, it makes money, and still break it. Why? Because you are the defining factor. You are responsible for example, in this example, making that system work or not by directly following the rules that system tells you to follow. If you don't do that, then you break the system and the system doesn't work. Now, I want to make a clear distinction. That doesn't mean buying a system that has a mathematical probability and it's all perfect and it looks great will still work. It simply won't, because the person that created that system himself or herself, and they put their psychology into that system. They put their understanding into that system. And there is that defining factor, them, the person that created that system. So they went through the pains and the struggles, and I'm talking about the ones that are good, the pains and the struggles, the losses, the loop, the feedback mechanism, the making money, the losing money, the struggle to get to break even, and then finally from break even to making profits. They went through all of that over the course of years to develop this system into what it is, and then they tried to sell it. You cannot take that away. That's in the system. All of that emotion, all of that experience, all of that emotion experience, and all of that education is all gone into that system by the person creating the system. So this is why having a system simply doesn't matter. Yeah, what matters is you creating a model that works for you as a trader or investor, that makes sense to you, that you've earned the right to use. Yeah. Tradition. Okay. Traditional technical analysis is based on indicators and patterns which will always be flawed for their lagging nature and statistical disadvantage. And I've put why traditional technical analysis does not work. There are multiple reasons why traditional technical analysis doesn't work, and I was very specific about putting traditional technical analysis, not just technical analysis, because technical analysis is a broad spectrum of analysis. I'm talking about traditional technical analysis that you can find in books that are quite old, or even some of the newer books that are based on traditional technical analysis for the last sort of 20 years. So if we go back 20 years, traditional technical analysis, using oscillators, using indicators like moving averages, using indicators like MACD, stochastics, RSI, oscillators, things like that, using Fibonacci and so on. And again, I'm not saying that these don't have value. I'm saying why they don't work. Okay, they simply do not work for two reasons. Number one, they are lagging indicators, period. There is no way that you can get a indicator to tell you something that is happening in the future. It's always going to be lagging because it make an indicator and the mathematical equation that is used for that indicator to indicate what it does has to be price. Yeah, so price delivers, it prints, and then the indicator starts to kind of do the equation, and it works from there. Without price, there is no indicator. Yeah, so it's always going to be a lagging indicator. The other thing is when it comes to sort of traditional technical analysis and indicators, they do have a statistical disadvantage. You can take any indicator that is supposedly profitable and works, and it gives you an indicator that you can use to get into the market, to time the market, and actually make money from that consistently over time. If you take all of this information and you find one that does, if you actually break it down and you look at it properly, you'll find it is in the sub 30%, probably 20% of the time, where you will have a statistical disadvantage. Well, it's actually 80%, but I'm saying 20% of the time it will work, and outside of that it simply won't, because it's a lagging indicator and there's other factors that you need to take into consideration. I will stop and I will just say something about indicators in general. They do have value, and if you do use them, there is a way that you can use indicators. Okay, and it's not one way. There is a whole host of ways that you can personally use indicators to make things better for you in terms of timing the entry of whatever asset class that you're trading. Change. When you know where the orders are, your only job is to patiently wait to pick up your money. Okay, and why learning to read price will change everything for you. What's so interesting about learning to read price is that you are taking the one thing that is constantly being printed second by second by second, or in some cases tick by tick by tick, okay, and you're using the constant, which is price. There is always a constant when you're looking at a chart, price. When you look at something like gold, we don't look at gold and say, oh, that's shiny. We look at the price. We don't look at the value of gold based on how shiny it is. We look at the value of gold based on the price that is being represented, and we see it and we say, okay, gold is worth XXX. When we look at a stock like Apple, for example, it is represented by price. We look at the price, and that tells us what the value supposedly of that is, of what Apple is as a company, and so on and so on and so on. Same with crypto, same with Forex, same with every other asset class. So it's the one constant. So why would you want to learn to read everything else, indicators, oscillators, to understand Wyckoff, to understand Elliott Wave, to understand moving averages and all of this stuff, and miss out the one most important factor, price? Doesn't it make more sense to spend most, if not all of your time really and truly understanding price? Because when you do that, everything else doesn't become irrelevant, but everything else is paired with it, and it becomes so much easier for you to make price work. Yeah? So this is an introduction. Okay, the first part of this was to really sort of emphasize, the you, and kind of slowly bridge and slowly go into the price and how that kind of defines the way we think, how we view the charts, how we can take that information to internalize and learn from that and experience price, experience the market as it's moving. And this helps us to move forward, to learn, to create a system, a methodology. And when I say system, I'm talking about personal methodology, to trade the market in a clean, clear, focused, disciplined, and more importantly, confident way, without you having to worry about all of this other noise that's going off around you. Okay, so that's the end of part one. In part two, I'm going to be discussing psychology and why it matters. This is an absolutely, a must when it comes to trading. Psychology is spoken about so much, in the trading circles or investment circles. It's something that some people believe in, some people don't. Some people accept it, some people don't. Some people understand it, some people don't. Okay, and we're going to go into this, in great detail. So I look forward to seeing you in part 2. It will be available soon. All the best, and I will speak to you then.